So I'm going to ask somewhat of the same question, but a little bit differently. And I'm going to stick with you, Fuquan, and we'll work our way back around. All right. Geography. So where do you think the opportunities are going to be nationally? We all know that real estate is local, but the industries that have been affected the most are, oil and gas, hospitality. So travel and leisure are being killed right now.
Resort areas, for sure.
All your resort areas that are heavy into tourism definitely are going to be issues. And if you have giant airline hubs around the country, those cities are going to be impacted. I can tell you right now, we have 35,000 American Airlines employees just in Charlotte. And those people, for the most part, aren't working either.
Yeah, and so, the logistics, we've got a lot of logistics.
So that said, Fuquan, where do you see some of the areas of the country that would have the most opportunity? And then some of them where I'm saying is going to be the safest to invest in. Opportunity for good deals, and then the other side of that would be the safest areas that you see.
I would say first thing that we would do is, of course, track unemployment rate to see which states has the highest unemployment rate, and pretty much go from there. Which states were hit the hardest? I mean, for real estate, we invest local in New Jersey, and for the notes, we buy tape, so it's nationwide. So following the unemployment percentages in these states is a big indicator. And also, like you said, what states have been impacted the most from, the airlines, the warehouses, and all those other non-essential businesses that had to shut down, restaurants, and a lot of people in the chain restaurants in those areas have been affected. So really looking at those opportunities, whether they are commercial or residential, we believe that's where the best opportunities will be in the states that have the greatest impact, due to this. Even in New York, close to us, it's a lot of people that's not going to survive the storm, and it would be opportunities there as well in those areas to actually help people. Like, I don't want to sit here and be like, this is, something that most investors look for a market reset, because it gives opportunity to make some money, right? But the real opportunity is where you can help people and add most value. So that's what we're kind of focusing on. I would say anyone who's looking to, make some money, look at adding value first. And what communities can you go into and add value? And that's one of the things that we take pride in, going into these C+ class areas and seeing where we can add value with the mom and pops that need the liquidity, not taking advantage of them, making sure that they get a fair deal. And that's, that's my take on it.
Right.
You have core values that, you're going to make everyone win in order for you to win. And that's how you stayed in business so long. Sean, what's your take on opportunities in what areas of the country? I did notice that Orlando happens to have about 4 of the industries that are hurting right now.
Yeah. Integrity is the word you were looking for.
Thank you, Don.
Saying was the Mouse House is not doing real well right now, but certainly they're doing well in streaming, but there's nobody going to the parks today. But I guess as Fuquan had mentioned, it depends on the industry, because being in the state of Florida where we are, a lot of retirees coming to Florida, a lot of retirees going to Texas and Arizona and California. So in our business, we do think we're in the sweet spot. But I think if I was an investor and I had cash, I would certainly look to pro-business states when this thing does turn. I mean, I specifically would focus on Texas. I would focus on Florida. I'd focus on just opportunities. I mean, at least in Orlando, we're still seeing construction moving forward. I mean, with us, we've got a community being built in Delray Beach. The problem is about 25% of our workers are not showing up. But, again, the construction is still moving forward. They're just being delayed. But I think if I had cash, I'd focus on states, that had pro-business leadership, because that's what's going to come back first and the one that's going to get the most assistance.
Agreed.
Absolutely.
Agreed.
Again, if you have any questions or comments, just put them in the chat box. Randy, how do you feel about the areas of the country?
Yeah, I think, for sure, this is not a moment in time, though, to venture out past your normal waters, right? Like, just pay our cash, and I think I should go to, New Jersey, and you don't really know anything about New Jersey. I would probably advise that's not the best move. You want to have definitely intimacy of knowledge about where you're focusing at, where you're investing. You are correct about what you're saying with the different industries that are affected, or areas like, where I'm at here locally in Florida. We have a single family residential operation. This area is definitely impacted by tourism as well, no doubt. And so that affects the residential housing market because of the number of people that are dependent in that lower tier first-time home buyer category. So that, even though I saw an email today, we sold 2 houses under contract today. So, people are still buying, but you got to look at the right areas. But even more specifically, I think, the knowledge that you have and the expertise that you have, for us, for example, with multifamily, Mike, what he said earlier is absolutely true. This is going to be the decade of operations, right? And so a lot of people don't have operational excellence, and that's going to be more important than just what's going on, with that employment base. So again, there's areas around Atlanta, big, huge hub, huge economic area, no doubt, with airport. Those areas are being affected because it's all on shutdown, but also, operator where, you've got people that have not done a good job. They're going to be in a position where they're suffering more and need to sell, and, the price discount. There's other people that maybe have owned property for 5-6 years. So there's a profit there. They've gone through this kind of hell, so to speak, of all this work. And they're like, man, I just want to sell and take some of my chips off the table. So it's going to be about, in this category, this space here, knowing what the opportunities really look like that are good, because just because, there's economic impact in an area doesn't mean that deal is still going to be a good deal, and that's where I think that it's critical to have the expertise. It's critical to be in a lane within, just because even on the other side of this, especially in multifamily, I've seen guys buy a deal because they think it's a deal, and then they are really not operational assassins, and it flounders, or they think that, oh, hey, we'll have a third party manage it, and the third party does a crap job, and they don't know how to oversee them, and it's really not that great of a result. So I think I go back to my first element. You've got to really be focused to stay within a concentric of a lane that you have expertise in, and that you have knowledge of the area, or partnering together with somebody specific that has great knowledge of that area.
Right.
That's a good lesson for all investors, is if you are weak in any particular areas, make sure that you team up with people that have strength in those areas, that again have integrity
and follow up on them,
and that like and trust.
Yeah,
for sure.
Mike, same question to you about geographic area. Any in particular you like?
So I would say, as a fund manager, we invest with people. I go back to the thought where the experts are. So we invest with Randy Lawrence, and Randy just said you have to be the operating ninja. The area itself matters less. It more matters who you invest with.
Right.
So we time selecting the best of the best operators, and we feel great about investing with Randy, for example.
Yes.
As far as areas, we invest here in New York City, and I have a great operator in distressed commercial debt. And we love the asset class. We love the entry point with strong downside protection, buying first lien defaulted commercial paper at the low investment to value ratio. But New York is obviously getting hit quite a bit, and it's unclear how it's going to come out. I really think that it depends on the asset class and the operator. So the operator matters a lot, and then the asset class will matter quite a bit. So office space, retail is going to get beaten up pretty bad. Multifamily in general should be okay with the good operators. Again, we operate in Midwest with steady markets. So at this point, if you think about it, the steady markets look pretty attractive because their impact on any asset class is likely to be less than the cyclical markets. So if you go look at the Phoenixes, Las Vegases, Southern Florida, Southern California, those markets do exhibit the yo-yo behavior. I would rather be now in Midwest. I would rather be in other parts, Southeast, where things are much steadier. Northeast, like New York and other, Philly and Boston, have been steady. They never really took a beating during 2008. There've been some corrections, but they've been steadier markets. So as far as the opportunities to invest fresh dollars, you may be looking for great operators at the great markets where they can find great deals. Like Fuquan is in New Jersey. New Jersey had a pretty bad beating during the past market, but the good news for Fuquan is he's a competent operator, and he's going to go find great notes during some level of distress. So it really comes down to selecting the people who you invest with, and then being experts in their asset class and having a razor focused on execution of their strategy. So the focus will be the key, and the the best operators will succeed. The mom and pop and the non-professional guys and girls will not do as well during the crisis. So that's the answer. It's not only the geography, but it's the operator plus the geography. And again, steady markets feels a little bit better to retain the value. But for new opportunities, you actually don't mind Southern Florida because you can get a better discounts when the problems hit.
Yeah, and there are some good home run hitters that do well in those cyclical markets, and they do time it right, but they're pretty few and far between. And I know that everyone in this room is more of the tortoise than the hare. We'd just rather have nice, steady,
singles
safe.
and doubles.
Yeah.
Singles
Use the baseball, which we can't watch, analogy. Singles and doubles. So, did you want to say something about Airbnbs?
We were talking about some of the opportunities that are out there, and I was listening to Jeff Watson and John Heyer yesterday, which was an excellent webinar that they put on, and they mentioned the Airbnb being a great opportunity to buy, because there's going to be a lot of Airbnb operators that will absolutely go down from this. I have lots of Airbnbs at this point. I'm up to 9. Yay! And when this first happened, they were canceled. I got cancellations at every one of them. And of course, I was a little concerned about that. But now, this whole month of March, I've been booked in every one of them. And I'm already booked for April for long-term stays, traveling nurses, people that are coming in to work at the power plant, even contractors that are coming in to finish up jobs, which has really, really helped me out a lot. And I think the reason why that's been good for me is because I'm in a dinky little town called Rock Hill, South Carolina. The ones that are in the resort markets are the ones that are really hurting because people are traveling there as a destination.
Right.
So are any of you involved in any type of Airbnb?
That would be a no.
No, everybody's shaking their head. No.
I do have one quick comment. So I heard something interesting here. So from New York City, there's within 2.5 hours, there's a lot of these locations, including Jersey Shore. So I heard some interesting, just anecdotal evidence there. People were very fearful that their short-term rentals would be empty. And the reality is people started running away from the city. And then they basically booked long-term stays in some of the Jersey Shore locations. And it seems to be a pattern. Again, I don't know if it's happening now, but a lot of people are probably still trying to get out of the city if they can, whether you're going to be bunkered in Manhattan or hunkered down in Jersey Shore. So I think some of these rentals will do pretty well as a replacement home being in a big city. If you can get away and save yourself the risk of being in a place like New York, there's going to be a little bit of that boost to that. What used to be short-term rental, now it's actually multi-month rental.
That's right. That's right. And the difference with a short-term rental Airbnb type property versus a hotel is you're not sharing a hallway with several other people walking up and down the hall. When you're, renting an Airbnb house, you're renting the house. So I think